All right. We are here live. Let's get IG on live. Yes, yes, yes. Good afternoon. Good afternoon. How are you guys doing out there today on this is Thursday afternoon now. This week is actually flying by pretty fast. Oh my goodness, this is already Thursday. This is already December the 2nd. So here we are into the last month of the year. Hi, she rise. Jumping on here. All right, so here we are in the second day of the last month of 2021, guys. Everything is flying about here. So again, what we want to talk about here is your year-end personal tax tips. This is Elaine Proby here, CEO of PROBY'S Tax and Accountant. So we want to get some folks on here so they can get this information. This is on the personal end of stuff, and even some of the people who are self-employed. I see someone over here sharing these videos. All right. Way to go, way to go. So, yeah, so one of the things we want to talk about today is how you can save money on your taxes for the end of the year. And there's some things that you can still do before the year closes that will help you out. So this is very important. Just some simple stuff. Now we don't have to do a whole lot to make this happen. And that's a good part about this. It's just some real simple stuff, some things that you may not even be thinking about. Once I point these things out, of course, you're going to be like, okay, that's not that much, but I can get it done and I can save some money on my taxes. And that's what we want, right? The most important thing here is either pay less taxes in or pay no taxes in at all. Of course, we like that one. And or getting a large refund back, right? A larger refund back. So for those of you who have had taxes deducted from your paycheck or people who have made estimated tax payments, right now is the whole idea is be able to get most of that money back, right? Which is what we love, and or get a larger refund and or not pay anything at all. So that's what we want to talk about. So we'll talk about 4 different ways that you guys can just quickly do, and this will save you on some taxes and some tips that we're going to talk about today. The first one will be, about making charitable donation. And this is the time of giving right now. So, because it's right here going towards the Christmas season. So we'll talk about giving, making donation, how that's going to help the taxes. We'll talk about that. And then we'll talk about contributing to your retirement fund. That's one of the other ways that you can save on taxes. So we'll talk about that. This is some real, again, simple stuff that you can do. We'll talk about reviewing your withholding. That one right there, guys. I want everybody to pay attention to that because that's one of the things that gets a lot of people in trouble. They're withholding and they don't, really pay attention to that. But at the end of the year, you want to make sure that that's right. So we'll talk about that real quickly. And then I want to talk about the self-employed and the freelance folks. I want to talk about what you guys need to be doing to make sure that you take advantage of all your deductions and, in other words, allow you to either not pay any taxes at all or pay as little tax as possible. So that's what we want to do. Hey, thanks for jumping on here on IG. All right, Black Opulence. Thank you for jumping in. All right, so let's just jump right on to the first point, guys. Again, I've got a lot of people who, when they come in to do their taxes, top of the year, we're still very unprepared, and which means that not only did we pass the end of the year where we can't make any adjustment, now we're into the top of the year where it's too late to do anything, and we're still unprepared. So we still don't have everything we need to make sure that we are taking advantage of all of our taxes. Back to Spinner. Hey, how are you? Thanks for jumping in here. All right, guys. So hit like and share on this video, and let's jump right on into how you can save on your year-end taxes and things that you can do very quickly. These are real simple points that I'm going to make out today. Make some note of this stuff and or come back through here and listen to this video. So the first thing we want to talk about is charitable donation, right? So charitable donation, hey, Dr. Spinner here. Charitable donation, guys, is one of the things that, we're all is in agreement that you give and you receive. So most people, give, they receive, and it works every time, guys. It really, really, really works. And so you can only give what you can afford to give, which is fine. And it doesn't matter what that is. Make a donation. It doesn't matter what that is. That will help you save on your taxes, but you're not necessarily doing it to save on the taxes, which is a benefit, of course, but you're doing it because, you have that giving spirit, and usually right about now, most people do. So cash donations, guys, is one of the dollar for dollar write-off deduction that you can get, taxable donation. You can do it if you pay cash in. If you give $50, $100, whatever that is, you can write it off. And one of the beautiful part about the cash donation now is that the new CARES Act allows you to write off up to $300 even if you didn't itemize. Now, for those of you who itemize, you know that you can take a larger donation, but if you didn't itemize because simply you didn't have any mortgage interest, property taxes, and some other deductions, and you said, well, I can't itemize, so if I give that donation, I wouldn't get the benefit from it. But yes, you will, up to $300. Even if you didn't itemize, you are allowed to write off up to $300 on your taxes. So that still helps the people who are not itemizing. So give cash donation, guys. Make sure your donation is given to a charitable, some 501c3 organization or a church, anyone who is qualified charity. Right, a qualified charity. That's what the rule says. It has to be a qualified charity, and there's so many qualified charities, guys. I'm sure we can all find charities to give donation to. The other thing that is also one of the write-off that we never really think about, some people do and others don't, is the non-cash contribution. You don't have to give cash, guys. You know, every one of us that give tithes and everything else cash-wise, you can give non-cash contributions. When you buy those toys and stuff like that, you know, all that is considered a non-cash donation. And this is a time, right? We love this. This is time for you to go and clean out the closet, clean out the garage, clean out the storage room, clean out any place that you have stuff stored. If you haven't used it all year, chances are you're probably not going to ever use it again, right? How many of you guys are guilty of this? If you haven't touched that stuff in the closet, if you haven't used the stuff out the garage, if you haven't been to the storage to even see what's in there, some of us got these storage rooms, we haven't even been there to see what's there. This is the time to go to that storage room, see what's in that storage room, take it out. Whatever you don't need, somebody else can use. So take it to a charitable place and let them give it away, or however they distribute that stuff to people who can use that stuff. And guys, you can get the benefit of a charitable non-cash donation on your tax return, reduce your taxable income, and pay less taxes, okay? And we can all do that one. I am sure there's a lot of stuff around the house that we can get rid of that other people can really, really use. Another thing that you can give away, if you have an old car that's just sitting there that may or may not be working, but you don't have any use for it, you can also donate a car. You can find there's places who takes cars as donation, and then you get a market value write-off for that. So, you know, if you have a car sitting there all year long, it's been in the driveway or it's been, you know, wherever you have it parked, you don't have any use for it, get rid of it. Get a taxable donation for it. Don't let it just sit there and you are, one, you're not using it, someone else can use it, and three, you can get a taxable deduction for it. Okay, so those are the things that you can give away, guys. As charity, cash donation, of course, that works. If you're itemizing, the CARES Act now don't even limit your cash donation. First, it's like 60% of what you make, but you can give as much cash donation as you like to your church or to any nonprofit organization. So that's excellent. And for those who don't itemize, I want to just repeat, you can write off up to $300 of your cash donation. And then don't forget to give away all the stuff that you do not need, right? You don't use them. You're never planning on using it again. Someone can make use of this stuff. Get rid of it, okay? So that's the first point today, your charitable donation. That's point number one, guys. Second point today, we want to talk about for the year-end tax planning. Point number two, contribute to your retirement plan, right? The more money you set aside for your retirement, for your future, the more you can reduce your taxable income. For those of you who have a job, if you go in there and make an adjustment, make a larger contribution to your retirement, you will notice that your gross taxable income on your W-2 is less than the amount of money that you actually make, because you only pay taxes after you make that contribution. So this is excellent. Review that stuff. If you can make a larger charitable contribution, you know, you have a 401k at your job, a 403b, or anything like that, you can go and make an additional contribution, maximize your contribution. It will reduce your taxable income and save you on tax dollars. These are some simple things that we can do right now, guys. Save taxes. This is what we want to do all the time, is to save on taxes. And so that's one of the things you can do. If you're self-employed, you can contribute to your SEP IRA, open a traditional IRA, maximize those contribution there. You're setting money aside for retirement, which is a great way to save. And you are paying less taxes. You have less taxable income. You're setting money aside. Now, one of the beautiful thing about this is when you set the money aside, pay no taxes on it now, you only pay tax on that money when you start withdrawing that money. So later on, when you're in a lower tax bracket and you retire and you start pulling that money out, you will still pay less taxes because your tax bracket now is lower because you have more of a fixed income. So that's the whole idea about setting money aside and not pay taxes on it now, pull it out, pay taxes on it later. All right. So I want to make that clear because some people think that when they start pulling their retirement, they want to know, why am I paying taxes? Well, because you are setting it aside now, pay as little taxes as you can right now. And then later on, your tax bracket is lower, you pull that money out, and that's when you pay taxes. So you pay less taxes at that point in time. All right, so that's the second point, guys. Second point today. Again, we're talking about tips to save you on taxes. These are last minute. We're in December. So whatever we have to do before the year is out, we need to do it now. Third point today, and this is so important. So many people get this wrong. Review your withholdings. Guys, all of you who have a job, when you start working or even during the year, you change your exemption, right? Everybody go and change their withholdings on there. They may be single zero, they may be going exempt, they may be, whatever, married to, whatever you have on your withholding. This is a good time to take a look and see what you have there, what it is that is on your tax withholding, and maybe your status changed, right? Maybe you were single and now you're head of household. Maybe you have a dependent now, or a new baby, or a dependent child, or dependent person who now lives with you. So what you can do is you could adjust your withholding. You can get more money back in your pocket, say for this month, whatever paycheck is left, you can adjust your withholding, get more money back in your pocket, right? And therefore, you will wind up paying less in taxes right now, keep more money in your pocket at this point in time, and still come out ahead when you file your taxes. Okay, so take a look at your withholding, see how much you're claiming there. Make sure that, if your status has changed and now you have another dependent or two, sometimes it's more than that. Maybe you bought a house, you have all these different taxable write-off that you're going to do with the mortgage interest, property taxes, all this stuff. Adjust your withholding, because now you don't have to pay in as much taxes because you have these adjustments that you're going to take, right? You have these write-offs, you have a mortgage interest, you have your property taxes, you just bought a home, you have more dependents, all this stuff will reduce your taxes. So you can go and change your withholding, make that adjustment, put more money in your pocket here for the holidays, have more take-home dollars, right? Pay less in taxes right now. Hey, Laverne, thanks for jumping in. All right, so this is one of the third way that we can adjust, and these tips right here will save us on tax dollars for the 2021 tax year, and of course, have more money in your pocket. Hey, sis, thanks for jumping in. All right. Okay, guys, so moving right along, let's get to point number 4. Point number 4, all right? And this one, again, is so important. Now, 90% of the folks is freelancing or have some self-employed business, or more than one, sometimes even more than one. Some of us have more than one self-employed business or we're freelancing, people who are getting 1099s. This is the most serious point, because what happens is we are never prepared with all of our write-offs, our tax deductible write-off, right? And all the way through getting your taxes filed, half the time we don't have all the deductions. We don't even know what those things are. We haven't checked, we haven't tallied anything up. So we couldn't even plan before the year is out how we can, accumulate our tax deductible expenses and or purchase any assets that we might need for our business. So we can't even figure this out because we have not checked on our deductions and we don't know where we are. So self-employed, freelance folks, is what I want you guys to do now before the year's out. Okay, Go back and start tracking your expenses. Gather all your receipts or whatever it is that you have. And now, because everything is done by a credit card or a debit card, or you have some other way of tracking this stuff. Some of you may even have an accounting software that you're putting stuff in. Some of you may create a spreadsheet program, whatever you're using. Make sure that all your expenses are there. And one way to make sure that you're doing this right is some of us use a debit card, a credit card, all different ways of maybe purchasing. Some of us use cash. Now, if you spend cash, guys, you have nothing else to show you where that cash is but the receipt. So that's the only time you actually need to make sure that you have that receipt, because if you went somewhere and you went to the office supply store and you purchased some items and you paid cash for it, you won't have anything to write off against your taxes unless you keep that receipt. Okay, so what we need, the freelancer, self-employed people, start compiling your receipt. Go through the bank account that you are using specifically for your purchases. Make sure that everything is there and you haven't used the business account and the personal account and some other account, right? Everything is not all in one place. You have time to sit and think this out, because so many times I have people who come to do their taxes, and at that point in time, they're still trying to figure out what they spend money on. And I've had, and this is so many times I've got this story, is that before we get started with the taxes, the client may owe a lot of taxes, but by the time we get done, right, they may even be getting a refund back. The reason for that is they never have all their deductions. And as we sit there and as I go through it and as I ask questions, have you done this? Did you buy a new computer? What happened? Did you travel? Did you take any classes? Did you do any of this stuff? By the time we get through processing these questions and answers and them going online and checking all their bank accounts and all their debit cards and everything that they use, they have so much deduction that they never had when they came to do these taxes and they owed. By the time we get done with all this, these people generally will get a refund or not have to pay any taxes. And look, over the years, I've seen this every single time, and this is what happens. So we want to be more prepared. We want to be ahead of the game. You guys, if you start now, then you don't have to do it last minute, and make sure that you gather all your expenses from whatever source that you have used over the year and whatever payment method that you use, whether it's cash or whether it's card, whether it's a debit or a credit card. Just find all that stuff, because sometimes we use a credit card and forget that we have used that credit card, right? Because it's not a dedicated credit card. So because of this, if you don't sit and figure this all out to get it right, you're going to miss a lot of deductions. And I've seen people pay unnecessary taxes, and we have to go back sometimes and amend these things because they haven't taken all the deductions. That is not what we want to have done, right? So yeah, hi Amelia, thanks for jumping in here, right? So that's why I want the freelancers and your self-employed folks to start gathering your receipts now, while you have time before the year is out, and because you will have time to purchase any asset that you may need for your business, any new computer, any new equipment, anything else that you can write off. You want to do it before the year's up, because you're on a cash basis and you can only take that deduction when you spend the money. Okay, so then you'll know that you can, let me go last minute and get this equipment. It's on sale, especially now. It's time to buy the new computer, time to buy the new equipment, time to buy whatever it is that your business needs. You get that, spend that money, and you can reduce your taxes. If you don't do it before December 31st, again, it rolls over into the next tax year, right? We want to make sure that we take all the deduction this year that we can. All right, so that's my 4 points today. Thanks, Leonard, for jumping in here. That's my 4 points today, guys. 4 simple points. You guys can just do this as soon as you hang up from this live. You guys can get started with this, and I'm guarantee you by the end of the year, you will be like, okay, I'm ahead of this game. I can get my taxes done. I can get it done early, get my refund quicker, or don't pay no taxes at all. Okay, so let's go over these points, guys. Year-end tax tips from a personal perspective. First point today is the charitable donation. Everyone's looking for some donation, guys. You can give to charity. If you give, you receive more. That is a true saying. And even if you're not itemizing, you can write up to $300 in cash. And for those people who are itemizing, the CARES Act allows you to write off. There's no limit to what you can write off. It used to be 60% of your income. Now with the new CARES Act, you can write off any amount of money. If you get $50,000, $20,000, $10,000, you can write that off as a charitable donation, based on your income. Okay, so that's the one. And then more seriously, let's do the non-cash donation, guys. All of us have stuff that is sitting around that we cannot use. Someone else can make use of the stuff. Clean out the closet, clean out the storage room, clean out the garage, wherever you have stuff piled up, and give it to a qualified charity, right? A 501c3 organization, the church, or somewhere that they can now have someone else use the stuff. And you can take a deduction on your taxes. Now, I've had people who said, well, I don't need a deduction because I'm giving, and, they don't feel right about it. I said, well, no, that's just the opposite of what you need to do. You want to save on taxes, pay less taxes so you can give more, right? So if you don't have to pay this extra $500 in taxes, then maybe you can give that $500 to charity. So why not give to charity, not pay the taxes, and you have more money to give again? So that's the way you have to look at it. So some people is like, okay, I get it. All right, so yep, clean up time. Get that right off. Yes. Clean up time. We can give so much away once we start cleaning up. Just only keep what you need to use, or what you are using when you need. Let someone make use of the other stuff and get the deductions, right? So contribute to your retirement plan. Number 2, contribute to your retirement plan. Maximize that stuff, guys, because if the more you contribute, the more money you have for your retirement, for future, and you reduce your taxable income, so you pay less taxes, and you have the money set aside, because later on when you retire and you start pulling that money out, your tax bracket is going to be lower. It's going to be generally it is, and you will pay less taxes on that money. If you pay taxes on it now, it's going to be maximum taxes, and that's not what you want. Okay, so contribute to your retirement plan. Whatever 401k, 403b, you guys can do a traditional IRA. For people who are self-employed, you can do a self-employed, a SEP IRA, which is self-employment plan. You can set that up, and you can even contribute up to $58,000 if you're self-employed into a SEP IRA, guys. That's amazing, right? 25% of your net profit, or up to $58,000, you can contribute to that IRA and not pay taxes on that money. That is awesome, right? So we want to take advantage of that, okay, based on your profits. So that's the second point. Third point today, review your withholding at work. If you're claiming 2 or 3 dependents or whatever that might be, you can reduce that. If in fact you have some changes throughout the year, you may have purchased a home, you have more mortgage interest and property taxes right off now. You may have a new baby, you may have more dependents. You can reduce your withholding. Review that stuff, see what it's like. You can reduce your withholding, take home more money now, pay less taxes in, and have more cash up front right now for the next couple of paychecks that you may have come in. For those weekly, you'll have more than one paycheck, and depending on how many more paychecks you have, but you want to have more money in your pocket now. So go ahead and review your withholding and see if you could make an adjustment there. You can just call a job and call HR and change your withholding. All right. And one thing I want to say here too, though, right on this point, I wanted to point out that some people go exempt. Now, this is just opposite of what we're talking about, but some people will go exempt throughout the year, maybe last, I don't know, month or 2 or 3. And what I want to point out here, just because so many people have gotten into tax trouble because of going exempt, and they have not calculated properly their tax situation. And sometimes they do that for the whole year, half the year, longer than they anticipated. And at the end of the year, they wind up owing taxes they have not paid enough taxes in. Guys, in the process of reviewing your tax withholding, make sure that if you have gone exempt at any time during the year or for any part of the year, make sure that if your tax situation doesn't allow for you to go exempt, make sure you change it now so you don't go into the new year with the wrong status and realizes halfway down the road, or when you come to do your taxes in either April or maybe even October, you haven't even adjusted that withholding, and now you have 2 years of tax problems. 2 years of tax problems. You have 21 and most of 22 because you did not change your withholding back. I seen it every single time. She said, great information. Right. Exempt topic. Yes. Oh, yeah. Exempt topic. We may have to have a whole new session on being exempt, when and how, if you should. That's a good topic to have, right? Because some people don't really get the exempt thing and they wind up in tax problems. Okay. Most people in tax problems is because of that. All right. So review withholding. Make sure that you adjust it accordingly. You know what you're doing. If you need advice on that, you may want to find out. All right. So that's the third point today. And the fourth point is my freelance, self-employed, anyone that's operating a personal business or any other type of business for that matter. Make sure that you start collecting all of your deductions, your receipts, if it's cash, if it's on a card, or if it's through some bank debit card, whatever it is. If you use a personal credit card instead of the business credit card, sit down and recap where you spent the money at, if it was not all in one place. And so you can start compiling this information. So when it's time to do your taxes, guys, you'll have all of your write-off. Too many people pay too much money in taxes because they simply didn't have the information. Just like I said earlier, the story is that I've had people who come to the desk who have sent in some deduction, who owe taxes. And after my interview with them, after me asking them all the different things that they spend money on, and after they go back and look up all their credit cards and receipts, and they come back with so much more deduction, not knowing that they were there, they wind up getting a refund. And most of these people do it, be like, oh my God, you don't know, I don't have to pay any taxes. No, you don't have to pay any taxes. Just think, if I didn't ask you all these questions, you would have been paid unnecessary taxes in, simply because you haven't tracked the stuff. You have not compiled the information. You haven't tracked it properly. Now you're rushing to do your taxes, and now you're paying more taxes than you need to. Okay. It's why we're having these sessions, so we don't have to do any of that. All right. So that's my 4 points today, guys. Hey, learn to send information. Okay. Yeah. All right. Got that one. Hi, Connect. Thanks for jumping in here. All right, guys. So those are my 4 points today. I want you guys to hit like and share in this video. Make sure that everybody get this information. Come back through here and check it out if you did make any points, or write them down. 4 simple steps that you can do to save on taxes. The whole idea here is, as you make money, you want to save on your taxes, pay less in, get a larger refund, pay little or no taxes. That's what we're doing this for. All right. So with that said, guys, we're here every Tuesday and Thursday, as you guys have had your notification on, so you can know when we're here, giving away a whole lot of free tax information, tax tip, business tips, how to stay in business, how to continue to earn more money, and how to pay out less, how to keep more in your pocket, how to continue to build wealth, guys. And this is the whole point. If you don't start now, then of course you will, if you don't start, you won't finish. You'll never get there. I like that. Okay, so turn on your notification. Okay, so there you have it. So if you guys have any further questions, give us a call at PROBY'S Tax and Accounting, 323-290-9034, or visit our website at PROBY'stax.com. And we have a secure portal. If you need to send us any information, you can upload everything there. So you can either give us a call or go to our website, or upload documents if you need to get some stuff done. And if you have any further question about any of this topic, you guys put it in the comments below. I'll come back through here and get those. All right. Laverne Smith say thank you guys for jumping in here. Really appreciate you. You guys have a wonderful rest of your week and a fabulous weekend. All right. So with that said, you guys have a wonderful day, and you guys take care of each other and take care of yourself. See y'all later.